Hello, everybody. Welcome. Let's get started right away. Dow Jones up 1.5%, Nasdaq up 1.8%, S&P 500 up 1.6%, Russell 2000 up 2.4%. Apple is down about 4%. Uh, all sectors are up. Pretty much everything is up except for Apple. Um, Advancing issues outnumbered declining issues by about 78% to 20%. Oil is at $58 per barrel, down 2%. Yield curve is up quite a bit. 5-year Treasury yield is up 13 basis points. 10-year Treasury is up 10 basis points. 30-year is up 6 basis points to 480. Non-farm payrolls for April came in at 177,000, above expected 130,000, but there were 58,000 downward revisions, a total of 58,000 downward revisions for the previous 2 months. So with those considered, the number was 119,000 today. And that's as I expected yesterday. As I mentioned in yesterday's space, I expected today's numbers to come in below expected figure of 130,000, including the adjustments to March and February. So that was slightly below that. The U3 unemployment rate was 4.2. That was as expected. Average earnings year over year jumped 3.8% versus 3.9% expected. So that's in terms of inflation, that's the Fed would like that. And permanent job losses increased to a multi-year high. So this is on top of continued claims and permanent job losses, all pointing to a weakening employment market. The job gains aren't really as much as the economy needs to sustain 2% growth. The growth rate is shaping up to be at stall speed at about 1%. And most of the job gains are coming from healthcare, education, etc. Construction jobs are positive. I think that's going to turn down soon. And leisure jobs are also positive, and I think that's going to turn down soon as well. So things are moving in the direction that I expected, and not much of a change here. Stocks are up today. They've been up I think about 8-9 sessions straight, which is very positive in terms of, if this is the start of a bull market, then it could be that, I guess, but I think the worst is yet to come. So next week we had the Fed meeting. Now the probability of a rate cut is basically zero. I think it's about 1%. And as we were talking the last couple of weeks, it was all the way up to 50% when we said it's highly unlikely they're going to cut. So the market has come around, and I think the Fed will probably signal, let's call it 50-50 still. I'm not sure what they're going to do for June. They might signal a cut for June. Let's see what the market is showing. The Fed meeting is announcement is on Wednesday. Meeting starts on Tuesday. In June, the probability of a rate cut is only about 30%. That really shifted. That was up to 60% yesterday. So after today's numbers, the market is now thinking no cut. Most of the market participants thinking no cut in June. That's interesting. That's a big change in one day, in one report. And I don't think the employment report is as positive as people think. But thank you, Sal Sage, for letting me know that the audio on YouTube is good. Appreciate that. We're going to read our Reuters article of the day in a second. Give me 1 second. Let me post this YouTube link at the top on X. Okay. All right, let's read our article. This is Yahoo Finance article. Trump again calls for Fed to lower rates after jobs report backs Powell's patience. A stronger than expected jobs report. This is what I don't agree with. I don't think this was stronger than expected. If you dig into the details a little bit, I think people are jumping to the conclusion that this was strong. But let's continue. Jobs report will likely reinforce Fed Chair Jerome's stance on being patient about any monetary policy changes, even as President Trump again called for the central bank to lower interest rates. In capital letters, no inflation, the Fed should lower its rate, Trump said Friday on his Truth Social platform. The president cited in his post that employment is strong, a possible reference to a new report Friday showing the U.S. economy added 177,000 non-farm payrolls in April, more than the 138,000 expected by economists. The unemployment rate also held steady at 4.2%. So let's see if they're going to talk about the revisions here. The resilience likely won't force the Fed to change its current stance, and it needs more clarity on how Trump's tariffs will affect the economy in the months ahead. Traders on Friday bet that any near-term rate cuts are now less likely. The market doesn't expect any action at the Fed's meeting next week on May 6 to 7, and traders reduced the odds of a cut in June meeting to less than 50%. Traders also retreated from bets of 4 more cuts by year-end. Yeah, looks like we're looking at 1, 2, 3 cuts by year-end. President Trump made his views known in recent weeks. He wants rates lowered, and he's not happy with the caution of Fed Chair Powell, who has said the central bank will wait for greater clarity while weighing both sides of its mandate for stable prices and full employment. There is a strong likelihood, Powell said last month, that the economy will be moving away from both the Fed's goals for the balance of the year, or at least not making much progress. Trump argued in his post Friday that some prices and borrowing costs were down. Gasoline just broke 198 a gallon, lowest in years. Did it? What is he talking about? I don't think that's true. He might be talking maybe the best states or something. Lowest in years, groceries and eggs are down, energy down, mortgage rates are down. Mortgage rates aren't really down. Consumers have been waiting for years to see pricing come down. An inflation gauge favored by the Fed did show this week that price growth slowed in March to annualize 2.6%, but was still 3.5% for the full first quarter. Yeah. Both are above the Fed's target of 2%. Other data released this week reinforced the Fed's conundrum. The U.S. economy contracted for the first time in 3 years to start 2025, due largely to rush by importers to beat the start of President Trump's tariffs. Economists are still concerned that the economic picture may look very different in several months as more of Trump's tariffs bite. Yeah, we're not going to know the impact of tariffs until Q3. So I think the Fed will probably continue to message no change for now. So I think this week meeting probably won't be that different from last meeting. The April jobs report showed the U.S. labor market remained resilient in the weeks after President Trump's Liberation Day. Reciprocal tariff announcements shook markets. The U.S. economy added 177,000 non-farm. So by the way, the previous article we just read didn't talk about the revisions down. So I think that's what the market is missing on this report. U.S. economy added 177,000 non-farm payrolls in April, more than the 138,000 expected by economists. Unemployment rate to 4.2. Okay, we talked about this. Let me just skim through this to see if there's anything we haven't covered. Federal government employment, which has been close to watch given the Trump administration's DOGE initiative, fell by 9,000. Total government employment, which includes state and local hiring, rose by 10,000 last month. And we had guessed Doge's impact to be in the tens of thousands of employees, federal employees range. So in 1 month, it was down by 9,000. And so that seems about in line as well. But the state and local hiring obviously will increase. And I would assume some of these federal employees will just go into state and local governments. The healthcare industry added, so not much of a change from Doge, basically. The healthcare industry added 51,000 jobs last month, continuing to stretch as a reliable growth industry. Transportation and warehousing added 29,000. So that's the interesting part right here. Transportation and warehousing added 29,000. So that's in line with a pull forward of imports. But what happens on the flip side next month to transportation and warehousing? So if you take the 177, subtract 58,000 revisions, you're looking at 119,000. And this, transportation whiplash brings it down to less than 100,000. And then you have leisure and hospitality, 24,000. That's also going down in terms of spending. We've seen on many fronts. So you're now back to like basically tens of thousands of jobs added. And that's before revisions in forward periods to the April figure. So, I mean, the best I can say is the economy is in stall speed right now. And I don't really see a catalyst coming. So I think this is still a bear market bounce, but it came in a little later than I expected. I was expecting that maybe in March we would see a bit of a bounce, and then April 2nd happened. That really took things down, and now we're kind of seeing a bounce now. And Tesla stock price is also moving as I expected for this week. I thought that it would be around this 380 to 390 range. And I thought that maybe there was a possibility of a bounce above $300 per share, but that hasn't happened yet. Let's see where the stock is today. 291. Yeah. So this is about as I would have expected for the stock for this week. So I'm trying to get better with my short-term calls, and I think that's also improving. So that's good. The stock was just oversold. It came down from 488 to 200 really fast. And I think way too many people tried to hedge Q1 results with put options, and they got their heads handed to them. But I don't think Q2 will be any better. So I would expect the Tesla stock to resume downward in the coming weeks and months. Because the fundamental challenges that the company faces is above and beyond some of these kind of monthly tariff discussions or jobs headlines. Tesla's main problem is competition, and the lack of progress on FSD. And Optimus is many years out. Robotaxis at nationwide scale are basically a decade out. So Tesla is really suffering from demand plunge for its vehicles. So I don't really see how the company can stay at these prices. I still expect to a stock price move downward to $100 per share, all else equal in the coming months. Friday's report is the most notable piece of economic data released since President Trump's Liberation Day tariff announcement on April 2. But Samuel Toombs, chief U.S. economist Pantheon, argued in a note Friday that the report provides a snapshot of labor demand in the run-up to the April 2 tariff announcements rather than an early assessment of their impact. I agree. Okay, so as of March, the economy was in stall speed, essentially. And we had a tremendous amount of volatility and uncertainty in April, and we're yet to see the impact of that in economic reports. I think that's going to take a couple more months to start showing its impact, and then we'll see. Oil price at $58 per barrel, and let's see if there's anything else we need to talk about today. So it's May 2. I expect low APR financing for the Model Y in the next 2 weeks or so, by mid-May, let's say. I think the demand for the vehicle is pretty low. and I don't see why that would change anytime soon. So to kind of cover the economic data this week, we had initial claims coming a little higher than expected. Continued claims also were higher than expected, and a jump from last week. So I'm going to be watching continued claims, and I expect them to increase to more than 2 million in the coming weeks, um, and um, and accelerate from there on. Um, Manufacturing PMIs are coming in still at 50, below 50. The prices paid and prices received components, so PPI and CPI equivalent components of ISM surveys are surging. So inflation expectations are surging. So I think Powell will still say long-term inflation expectations are still well anchored, but I think the Fed will be the concern will continue to increase. Consumer confidence is at recessionary levels. Job openings dropped a lot in March, so we're still seeing low hiring. So I think everything is in place for layoffs to start increasing now. All right. Let me see if there's anything else here. Any questions, comments, please request to speak. Otherwise, we're going to call it a day in a little bit. Let me just read these headlines, see if there's anything I want to explore. Trump's April tariff revenue topped 17 billion. Trump budget includes 3 billion for World Bank's fund for poor countries. Okay. Trump's April tariff revenue topped 17 billion. Let's click into that for a second. And then let's see the other headlines first. China says doors open to talks. I looked into a little bit. I don't really know if there's anything new they said there, but this is going to take months and months. The uncertainty will continue for the foreseeable future, I think. Trump budget seeks 23% domestic cut omits economic forecasts. Okay, let's look into that later. LVMH revival plan. So China hints at possible thaw with U.S. weighing trade talks. Okay. Trump stokes Harvard feud by threatening tax-exempt status. Gold hits for first back-to-back week losses this year, which is also in line with what I expected for gold. It's not really a good investment for the long term. It's really just when uncertainty is rising or inflation expectations are surging. That's really when gold, and it looks like it's kind of played out for a little bit. If there's a recession, gold will go down. So it's not really a recession play, and neither is Bitcoin. Apple stock slips amid the worries about tariff impacts. I don't know if that's the reason, but all right, looks like we covered a bunch. All right. Trump's April tariff revenue topped 17 billion. That dwarfs any haul from his first term. President Trump tariffs became very real for importers last month as the government collected more than $17.4 billion in customs and certain excise taxes during April. That was nearly double March's haul of $9.6 billion, dwarfing the smaller spikes in revenue seen during Trump's first term. All told, the duties have deposited more than $70 billion into government coffers since January 1. 70 billion since January 1, year to date. So that's 4 months. And in April, it was 17. So if you take out 70 minus 17, you're looking at 53. Divided by 3, you're looking at, what, 18? So how is that different? All these and deposits more than 70 billion to government coffers since January 1. Yeah, I don't know. I don't know how that's different. That was double March's haul of 9.6 billion. So March was low, but the average for the first 3 months is not that different from April. Okay. As billions of dollars pour from tariffs, we're only transition stage, just getting started, Trump said. Okay, he could be right. April's data will perhaps provide only a glimpse of what's coming. The biggest tariffs, 10% duties on nearly every country in the world, took effect on April 5, with plenty of additional tariffs promised for the months ahead. Yeah, that doesn't make much sense. I don't think this $17 billion figure reflects what's about to happen. But let's continue. But also complicating the tariff revenue picture going forward are immediate signs of a drop in shipping volume in response to the duties. The Port of Los Angeles, as an example, is now projecting a drop in cargo volume of more than a third starting next week. Okay. The large haul also comes despite significant concessions from Trump in April. I mean, that's probably what it is. He made a bunch of concessions in April that offered a reprieve to giant importers like auto and technology makers and countries that have been in line for much higher tariffs before the 9-day reprieve. Okay, give me 1 second. Okay. Trump delayed additional reciprocal tariffs on more than 100 nations until this summer, with negotiations underway there. He has also promised new sector-specific tariffs to be announced in the weeks and months ahead on items such as semiconductors and pharmaceuticals. Okay. The data is significant, but could be slightly overstated, with the Treasury Department reporting both customs duties and certain excise taxes from the Department of Homeland Security as a single category. Excise taxes are different from customs duties, and more precise data is expected in the coming months. But the amount of those taxes collected by DHS historically is small, a long way before it can be used to reduce taxes. Trump himself has often touted the surge of government tariff receipts, suggesting the U.S. government is on its way to repeat an era of U.S. history that ended more than a century ago when tariffs made up a significant portion of government revenues. We're going to make a lot of money from tariffs. That money is going to be used to reduce taxes, Trump said on April 23. We're going to get big tax breaks. Yeah, I don't see how that's possible. I think the smooth sailing that is going on right now with big beautiful negotiations is going to hit a snag. All right, let's switch to budget discussions. Any questions, comments? Please request to speak. Trump seeks 23% domestic cuts, omits economic forecast. President Trump asked Congress for deep cuts to domestic agencies and a boost to the military in a preliminary outline of his 2026 budget request. The president's budget calls for $557 billion in non-defense spending next year, which represents a cut of $163 billion from current levels. National security funding would increase to $1.01 trillion, a 13% increase from the previous year. Known as this skinny budget because of its lack of details, the document is a new president's first opportunity to outline his vision for the size and scope of the federal government. But Trump's version was even thinner than usual, omitting baseline economic and interest rate projections, which are typically a feature of budget proposals submitted by the White House in prior administrations. There was also no set of forecasts for the government debt, deficits, or tax revenue in the document. Also excluded are projections related to entitlement programs headlined by Social Security and Medicaid, which are large drivers of overall federal spending. While rarely enacted in full by Congress, the budget request helps to kick off the annual appropriations process. The process in recent years has seen partisan battles that repeatedly featured threats of or actual partial government shutdowns. The record defense budget would fund the Golden Dome Missile Defense Project, shipbuilding, and nuclear modernization, border security among its top priorities. It includes the 3.8% military pay raise. That's interesting. I'm going to take that down. Let me just look at something real quick. How many Americans work for the military? About 1.32 million individuals serve full-time across the 6 military branches: Army, Navy, Air Force in order, Marine Corps, Space Force, and Coast Guard. And then the Reserve and National Guard members, approximately 738,000 personnel serve in reserve capacities, ready to be activated as needed. Civilian employees, Department of Defense employs about 754,000 civilians. So we're looking at about 3 million people in the military, including civilian employees. Okay. 3.8% military pay raise. Give me 1 second. President Trump's proposed 3.8% military pay raise for fiscal year 2026 is specifically designed for uniformed military personnel and does not extend to civilian employees of the Department of Defense or other federal agencies. 3.8% raise aligns with the Employment Cost Index, which tracks private sector wage growth, and is broader $1.01 trillion national security proposal. This increase would apply to all active duty service members across the 6 military branches, including Army, Navy, Air Force, Marine Corps, Space Force, and Coast Guard. Additionally, junior enlisted personnel E4 and below receive an extra 10% pay boost in April 2025. Junior enlisted personnel E4 and below, bringing their total raise for the year to 14.5%. E4 and below. In contrast, Trump administration has indicated plans to freeze civilian federal employee pay in 2026. Draft budget documents from the Office of Management and Budget OMB suggest that civilian workers, including DoD civilians, will not receive a pay increase next year. Wow, that's wild. Therefore, while uniformed personnel are slated for 3.8% raise in 2026, civilian federal employees are facing a proposed pay freeze. E1 to E4, private seaman recruit airman basic, private second class seaman apprentice airman, private first class seaman airman first class, specialist corporal, petty officer, third class senior airman. All service members receive 4.5% base pay raise, additional 10% granted specific for those at E1 to E4. Interesting. About 500,000 people E1 to E4. Okay. Okay, let's continue. The Department of Homeland Security is central to Trump's efforts to crack down on illegal immigration, increase border security, and deport undocumented individuals, would see its budget rise by nearly 65% in the plan. On the domestic side, Trump is proposing a 22.6% cut in spending for the 2025 fiscal year. The proposal would slash environmental and renewable energy programs, as well as initiatives designed to address racial disparities with the EPA and energy departments seeing deep reductions. Trump is also asking lawmakers to cancel $15 billion in former President Joe Biden's signature infrastructure law for renewable energy programs. The White House previewed the budget with a series of talking points that highlighted Trump's use the spending plan as a social policy document. Proposed reductions in early childhood education, housing, science, and foreign aid are branded as cuts to woke. Jesus. The elimination of $3.5 billion in refugee assistance came under the heading Defunding the Open Border. Climate, environment, and renewable energy programs would be slashed on the premise of ending the Green New scam. Yeah, I wonder what this means for Tesla's $7,500 EV credits, but I guess we'll find out. In other news, retail investors poured in $40 billion in April on top of another large number in March. So 2 months in a row, retail investors bought the dip. And in my opinion, the stocks that benefited the most from this are Nvidia, Tesla, Amazon, AMD, Palantir, Apple, Microsoft, Google, Meta, and Broadcom. I think these 10 stocks, especially Nvidia and Tesla, are retail investor darlings. Nvidia, Tesla, Palantir. Nvidia probably got multi-billion-dollar flows. Tesla probably got a billion or maybe a bit more. Probably also multi-billion from retail investors. And when I say retail investors, I'm talking more like Robinhood type of investors. Okay, so these are accounts in tens of thousands, maybe hundreds of thousands, maybe millions range. Not very sophisticated investors, but and there's a tendency to buy the dip right now, and maybe they will prove correct. I don't know, but I doubt it. AMD, Amazon, Palantir probably benefited from hundreds of millions range. Palantir especially benefited quite a bit because it's also a very low market cap company compared to others. Like Tesla is a $1 trillion company. Palantir is a $290 billion company. And what's AMD? Let's see. AMD is 160 billion. Yeah. So AMD in the last month is flat actually. And then Palantir in the last month is up about 40%. And then also MicroStrategy is another one that I think is benefiting from this dip buying trend by retail investors. All right. Anything else? Any other questions, comments? It's been about a half hour. Let's call it a day since a relaxed, casual Friday. Thank you very much, everybody. And I will chat with you all next time. Take care.